Hello GST. CNBC TV 18's Menaka Doshi decodes the benefit of GST for IT sector today.
On Hello GST, today we analyze the impact of GST on India's IT or information technology sector.
I would say one of the most difficult questions that the country is trying to answer is whether the software is goods or services, and we have a huge litigation which is going around in the country right now and the taxability around it. One would presume and would really look forward to see that under GST this problem will be resolved, that you don't have to get into whether software is goods or services. I don't see it happening very easily unless and until the GST laws of the states and the center clearly define some of this. To give you an instance, look at electronic download of a software. So where you are downloading software from the internet, this is deemed to be a service globally. So look at the EU law, look at the UK VAT, electronic download is a service. But come to India, the service tax law presumes that this is a service and the VAT law presumes that this is a sale of goods. So you're getting taxed under both these respective laws. Under GST, you have a definition of supply of goods and then supply of services, and also something which says or both, meaning thereby that you may still have the confusion of to classify software as goods or services, and probably if this is not clearly spelled out, you may still live with the same challenges, and probably these challenges will be more than what they are under the current laws. The second is around place of supply rules. Under the current law, normally a software developer will be under for service tax. If he's rendering services, he will be centrally registered from one premises wherever his customers are located. Under GST, he would have to see where his customers are located, and accordingly he would have to discharge his GST liability. If he is having multiple places, each of the multiple places would have to be registered separately. He will have to see to it that the place of supply is going to be the place where the software is really consumed. This is going to be something really difficult if one looks at how the rules are going to get framed for B2B transactions and B2C transactions. Take a simple case of a software company dealing in antivirus software, and his end user is a direct customer. For the company, it will be important to see where the customer is, what is his location, where is it downloaded, and also then determine whether it is goods or services, so that he can discharge his GST liability correctly. This means that there are going to be more challenges for the IT industry as compared to what they are around the place of supply rules. Probably another issue that I can immediately think of is a lot of software companies are situated in SEZs, or they are software exporting units, STPIs, and most of their software exports are zero rated. So they are going by the refund mechanism, or there is an exemption for some of the services that they consume. Probably under GST, the working capital requirement is going to be far more bigger for two reasons. One is the rate of tax, and the second is some of the exemptions may be converted into refund mechanism, thereby meaning that these companies would have to invest more of cash into their business so that they can run it more efficiently.
So will GST just create process complexities, Sagar, or will it also hurt the bottom lines of both those who sell software in India as well as some of India's major IT exporters such as TCS, Wipro, Tech Mahindra, Infosys, etc.?
This would impact the total tax, and if you do not have a separate rate, if you see the VAT rate for most of the states, it is at about 5%. Now, under GST, if you do not have a preferential rate for software, for instance, and if it is come into the regular stream, it is going to be a larger impact as compared to the current tax rate. This is clearly going to be there.